Yeah, my name is Thomas O'Regan, and over the last 3.5 years, me and my wife have built an 11 property portfolio. And when we started our property portfolio journey, when we started buying investment properties, we had $45,000 of capital to start with, and we have grown it from there to $1 million of equity now in 3.5 years. So, what I wanted to speak to you guys about today was what is a cash on cash return, and specifically, what is a 10% cash on cash return? Now, effectively, cash on cash return is the measurement or the calculation of however much money you put into the deal, how much money are you getting back per year as a return net? Like, how much passive income are you making from that initial amount of capital that you've put into the deal? So, a good rule of thumb for, I guess, commercial investments, professional investors like to see something like a 10% cash on cash return. And it's different from yield. It's not the same as like what is the yield on a property. It's completely different. It's a measurement of how much money you're getting back in comparison to how much money you put in the deal. So for example, if you buy a property that's a $1 million property and you're getting a 10% yield on it and you put $1 million into it, that's a very and you buy it cash, that's a very different calculation to what it would be if you bought the same property with a mortgage. But effectively, if you want to work out what's your cash on cash return and you're using a mortgage and your property has running costs and all that sort of thing, this is basically how you work it out. So this is just a very simple example. For example, you buy a property for $1 million and you use, let's say, a 30% deposit. So you put in $300,000 of your own money. And remember, the actual number that we're trying to keep track of here is the amount of money you put in. So you put in $300,000 of your own money for the deposit, and then you put in another $100,000 for other associated closing costs like legal fees and other things like that, building pest inspection and stamp duty, whatever. Total money you've put in is $400,000. And let's say, for example, this $1 million property does have a 10% yield, which is very good, and it's giving you $100,000 of net income per year. Now, it's very important when you measure cash on cash return, you need to first understand what is your net income, and then from there you deduct from your gross income, you deduct all the expenses, and then from your net income, after you've paid everything there is to pay, except the mortgage, you need to deduct the mortgage payments to get to your ultimate cash on cash return. So say, for example, if you bought this $1 million property, you had a $700,000 loan on it, you had a 6% interest rate, your mortgage repayments would be around $42,000 per year. So $42,000 per year. Say also the other running costs were $18,000. So we've got $100,000 of income. Now that income is reduced to a passive amount of $40,000 per year. So just to recap, you had $100,000 of income, which is being produced by the property. And now, after all expenses, after you paid absolutely everything except for tax, you are left with $40,000 of passive income from this investment. Now, remember, you've put in $400,000 into this deal, and each year you're getting $40,000 back into your pocket. So that represents a 10% cash on cash return. So remember, just to recap, a cash on cash return is how much money you put into the deal over how much money you get in return each year. And this example we've just done was a 10% cash on cash return. And for most professional investors, this is a pretty good metric to go for. This is a pretty good success. If you're getting a 10% cash on cash return, that's pretty successful. But if you want to be really aggressive, you can go for much higher. But I know there's a lot of people that don't really know how to invest. They're not professional investors, and they'll settle for much lower returns than that, like 5% cash on cash return, which is like ridiculously terrible. But anyway, that's what cash on cash return is, guys. If you have any more questions on how to invest in property, just hit me up in the comments. And if you like these videos, just subscribe. Cheers, guys. Bye.